How many of you are familiar with the difference between a traditional IRA and a Roth IRA? Okay, so it sounds like a couple of you. The basic concept is save now, pay later, versus pay now, save later. So in the most traditional type of retirement account is a traditional IRA, whereby you're saving taxes now. So the amount you contribute, you do not have to pay income tax on. The beauty of that is what we were just discussing, where it's basically the government giving you a tax-free loan. Once that money's in that account, not only did you not have to pay taxes on the contributions, the earnings in that account you do not have to pay taxes on. So in a taxable investment account, let's say you just open up a regular Fidelity account, any interest you earn, any dividends you earned, that's all taxable one way or another. In addition, when you sell those securities, you recognize capital gains, those are all taxable. In a retirement account, it is not. So you can have as many capital gains as you need recognized. The trading, you don't have to worry about the taxes associated with it. The dividends, the interest, none of that is taxable. That also applies for a Roth. However, the difference between a Roth is, with a traditional, once you start withdrawing that money in retirement, now is when you have to pay those taxes that you never paid before. So not only are you now getting taxed on the contributions that you never got taxed on, you're also getting taxed on those earnings. With the Roth, you pay taxes up front. So you don't get that tax break up front. Once you contribute, you also get the benefit of those earnings. Everything is tax deferred. And when you withdraw it during retirement, the beauty of the Roth, you never pay taxes. So you have an account sitting there, growing tax deferred, that you never have to worry about paying taxes on ever again. It can grow exponentially, and you will not pay a single dime on taxes. So this is why we recommend, if you can, and there's certain rules surrounding who's eligible to contribute to Roths, which John will go over soon, take advantage of the Roth if possible. The other things you need to consider, if you're debating between should I do a traditional, should I do a Roth, is your current tax situation. So if you think that you are in a low income tax rate now, and it might decrease over time, you may want to consider the traditional, or the Roth rather. So there's various things to factor in, but again, if the Roth makes sense for you, we would highly recommend it because you're not paying taxes ever on those earnings.